It's a brand new week to all our viewers, and you're welcome to another edition of the Economy and Politics Show this Monday, September 21st, 2020. In this edition, we'll take a look at Nigeria and the pathway to achieving inclusive economic growth. Leading this conversation with me is a renowned economist and CEO of BAA Consult, Dr. Biodun Adedipe. Nice to have you once again on the show, Doctor.
Thank you very much, Ottoabasi.
Yes.
It's my pleasure being with you this morning.
Yeah.
And I thank you for having me.
Yes, I remember the last time we had you was in June, and it's nice to have you back, and it was a refreshing conversation we had last time. Looking forward to another interesting one today.
Thank you.
Now to all our viewers, the September 2020 Monetary Policy Committee meeting of the Central Bank of Nigeria begins today in Abuja, with the Governor of the Central Bank, Mr. Godwin Emefiele, presiding. Tomorrow, Tuesday, September 22nd, 2020, from 2 p.m., he will announce the decisions covering the monetary policy rate and other indicators at the end of the meeting. We hope to monitor that and bring that to our viewers on the key decisions from the MPC. Let's get on now to our conversation. And for Dr. Adedipe, as Nigeria counts down to its 60th anniversary, which is a diamond celebration, this country has been described as a failed political economic structure, which has not allowed it to drive socioeconomic and inclusive growth, which has been the bane of the country. Experts and analysts are calling for a fiscal restructuring of the nation. What is your response to this clamor, which has been ongoing even in return to our Fourth Republic? Dr. Adedipe, can you hear me? A slight technical challenge there, but what we're looking at today is achieving inclusive economic growth, and definitely we will get back, Dr. Adedipe, to look at the first issue. But just to our viewers, once again, the Monetary Policy Committee meeting of the Central Bank of Nigeria kicks off today, where we'll be looking at the key economic indicators. For our viewers, Nigeria faces a high inflation rate of about 13.28%. Currently, the other indicators show that our economy recorded a contraction for the first time since 2016. That contraction was minus 6.1%. Also from the economy, the current unemployment rate sprang up to over 27.2%, higher than 23.1% as at Q2 2018, showing us that the economy is currently facing enormous challenges in this period, and clamor for us to really navigate the situation. The MPC meeting also will seek to look at how the fiscal structure is navigating the economy in terms of support to policy, because this has been the recurring expectation for the Monetary Policy Committee members. So, Dr. Adedipe, can you hear me now? Still trying to get him very clear. I mean, it's part of technology, you know. You want to make things happen correctly, and sometimes that happens. But like we're saying, the current situation in the economy is a challenging one, and this is not isolated from the global pandemic, the COVID-19 pandemic that has disrupted global supply chain. We've seen economies record contractions. Economies like Japan are already in a recession, trying to get their way out. UK also recorded a recession, and same with Canada. Now, all these economies are G7 leading economies. The UK also recorded some level of response to its initial recession, the first time in over a decade. At this period, global economies are looking at how structural, monetary, and fiscal policy frameworks can synergize. In Nigeria, it's quite challenging because, like I said earlier, the various macroeconomic indicators are showing huge challenges at this point. The first one is the inflation rate, which is high, unemployment rate, which is high, and even the poverty rate, which is also high. Economists have said that Nigeria is in a stagflation, and we're heading to a recession in the third quarter of 2020. On the other flank, we have a macroeconomic approach taken by the government, which is pro-market, and being resisted by trade groups and labor unions. With the rising cost of food prices and the squeeze on Nigerians in terms of their income levels, how can we really navigate this period? How can we move on as a country to make progress? That will be a huge challenge this period, and it calls for the country to move on. So what is the way forward in this regard? How can we achieve growth as an economy? This is what Dr. Biodun Adedipe is going to give insight into, as we are hoping to reconnect with him quickly in the course of the show. But very importantly, last week there were some key indicators that showed that we need to really reposition our economy and look more at how we can attract capital investments. It also shows that the Q2 2020 capital importation report wasn't so good in terms of foreign direct investments. We had a conversation which we monitored of the Nigerian British Chamber of Commerce, where Britain, the UK, reassured Nigeria that it is a major trading partner. It's key in terms of Africa investment and trade. But again, it's looking at the kind of reforms that we carry out in our country and how those reforms can lead development in the nation. So those are very important issues that must be taken seriously in this period, and very, very tactful. So I hope we have Dr. Adedipe back now. Doctor, can you hear me? Trying to connect a bit again with Dr. Adedipe, but like we're saying, the issues of reforms are also key for economies like UK. How Nigeria reforms its economy becomes very important at this time. These reforms are critical because they open up the opportunities for investments and all stakeholders, how they would work together to improve the economy. Yeah. So Dr. Adedipe, can you hear me now?
Yes, I can hear you.
Apologies, we had some slight technical challenge.
It does echo. Good.
60 years since independence, and some people have raised concerns that the country has been described as a failed political economic structure, which has not allowed it to drive socio-economic and inclusive growth. Experts and analysts are calling for a fiscal restructuring of the nation. What is your response to this clamor of fiscal restructuring of our nation and economy?
All right, thank you so very much for that question. It's actually been an issue that we have had coming for us in Nigeria over a couple of decades. And that is simply because we got ourselves into a position where every state of the federation looks at the central government as where they derive, let's put it quote and unquote, their means of livelihood. And I recall an experience I had about 10 years ago, in fact, to be precise. This was October 2010. I was privileged to serve in a 23-man presidential committee that also had, as part of its mandate, the terms of reference, this particular issue of fiscal restructuring. And we had a simple question at that time, that if we were to look at the 36 states of Nigeria and make an assumption that none of them draws one single naira for the federal allocation account, would they be able to survive? And at that time in point, we discovered that maybe we could take 1, 2, maximum or 3 of them that can probably survive without federal allocation. So it became also very clear that we were running a system that was not sustainable fiscally. And that also became what you might call a foundation for the recurrent risk exposure of our sub-national government when it comes to revenue generation and mobilization. So what we said then was that that gave us a clear indication that the fiscal structure we're running was not sustainable. So in which case we needed to do something about that. So, and the critical thing we said there was that let's look at Nigeria with a pair of fresh eyes, and now tell ourselves the home truth that we must move away from that arrangement to a situation where the states will be indeed put in a kind of state of emergency, because if you don't create an urgency, there is the likelihood that we continue to do it in the same old way. So if we can only achieve that by doing one of two things, okay, in context of fiscal restructuring. The first is to recognize that, number one, we need to do something about the revenue sharing formula on the one hand, because as it were today, it puts a lot more resources at the central level. That's the first thing to consider. We need to do something about that. Then secondly, is to create an environment where the states begin to compete with themselves. So once you begin to compete with yourselves, then you've come to a reality where for me to be able to deliver my agenda as a subnational government, whether state or local, it means I must look at, number one, how to drive resources from within, what we call internally generated revenue. And then secondly, if I want to attract resources from outside, what then are those conditions I must ensure prevail within my constituency? So if those conditions exist, then I will be able to attract resources from outside of not only the central post from which we all draw, and also beyond my own internally generated revenue. So once we get to that, everyone will become creative, because that was the argument then. The same argument today. So those are the three dimensions we must address in order to fiscally restructure Nigeria. As I said, revenue allocation formula is important to look at. In fact, if you look at the extant law concerning that, we've had this since 2004, and that law says that this law is subject to review, that is the allocation formula, not earlier than 5 years. Now, that means if we were to follow what that extant law required, we should have in fact reviewed that allocation formula way back 2009, which would be 11 years ago. So here we are today, we are not even talking about it, which means it's something we need to look at, and also now look at the area of making states now to indeed look more inwards and become more competitive.
Definitely.
I would in fact say it's a thing of urgency as we stand today.
Urgency, indeed. And I get what you're saying, particularly about the revenue allocation is long overdue in looking at the whole distribution, which is very key for this time. But when you look at our economic indicators, they are challenging. That's what I've been trying to emphasize when we had the initial hitch. We have high poverty rate, about 40.1%. We have high unemployment, about 27.2%. We have high inflation, about 13.28%. And after this contraction of second quarter 2020, which was minus 6.1%, we're definitely heading for a recession, except some magic one comes in. We have seen now also a market-based approach taken by the government. I know you have your view about it in terms of the power sector, the subsidies, and then the pricing, electricity pricing model now. And of course, the downstream sector where the premium motor spirit pricing, this deregulation process has taken effect. Market forces are beginning to determine the pricing. So it is being resisted by labor also. From your perspective, Doctor, what is the best approach for the country? This week, they've given ultimatum, the Trade Union Congress. Next week is the ultimatum of the Nigerian Labour Congress. That's when it's going to elapse. So we face imminent strike, resistance, even to the current approach.
Yeah, thank you very much for bringing this up, because it is a very fundamental one. And the way I will look at this is to roll it back to the history that brought us to where we are today. Nigeria began the journey of privatization way back in 1977. And then, of course, by the time we got to the early 90s, I personally, as a professional economist, became actively involved in the discourse. And I remember vividly, there was a conference that was organized by the Securities and Exchange Commission way back in 1994. I was a speaker there. I made the point very clearly that we are unlikely to make success of privatization in Nigeria. And I was looking at what happened in 44 countries, because that was my mandate. Look at how it was handled in other countries. And I brought what happened in 44 different countries around the world. And I said there was clearly a problem with the way we were going with privatization, because we were falling into the error of crony capitalism. And that is where you convert a public monopoly into a private monopoly. And so if you do it that way, then you lose the essence of the benefit that competition could bring into that space. So now, when it comes to energy, therefore, we look at the two major perspectives, which is refined petroleum products on the one hand, and of course, the derivatives. And then we now talk also about the other side, which is electricity power. All right. So the real issue for us in Nigeria today is that the process of handling privatization and deregulation, if I remember also vividly, this was maybe about 15 years ago, I described the regulation of the oil sector in Nigeria as dirty. I coined, that terminology. I called it dirty deregulation. Okay? Dirty deregulation, I said there, simply means you are not going about it the way it's supposed to be done. If you can't deregulate a sector and still have the regulator, quote and unquote, NMPC, government agency, also being involved in that sector as a commercial dealer. So that was, what you might call a glitch, all right? And then, of course, the other side to it is that the entire process, even our pricing template, had an element there that shouldn't be there in a deregulated environment. And this terminology we refer to, price equalization. So insofar as you have all of this in there, we still have the understanding by most people that there are still some aspects of that government is still carrying with. Okay, so that makes it also difficult for the citizenry in general to accept that the government is well-meaning when it says it has adopted a policy of this dimension. So the first thing that we recommend to the government where we are now is, if there is fire in the house, you have to douse the fire first before you now talk about repair to the damage. And then when you even do the repair to the damage, you then begin to ask yourself, will the outcome of this repair also get us to where we want to be? So I will implore the government to get into an engagement with the labor union. The Nigerian cannot at this point in time afford a labor, unrest or strike, whatever you want to call it. We
at this point, can't afford it.
We just can't afford it. We must go back to the table and ensure we douse that fire, and then return now to the policy desk and ask ourselves, this deregulation, are we going about it the right way? Like I remarked in the convention, I think about a week or so ago, I said, what has happened now is that because government is not finding it easy to generate revenue, that is why we suddenly came to terms with this and looked at what is the way out. We can do away with subsidy at this instance by ensuring that the available revenue can now be allocated to what we want to do. And if you look again at the history of the way we handled the subsidy issue, and we can trace the data from 1966 till date, we find there also that different reasons had been given over time for removing subsidy. And so the issue with us today, like I've always argued, is that subsidy will remain perennial for Nigeria. Claim to remove it today, tomorrow it will come back. And why? And I've explained that several times. Insofar as you depend on imported refined petroleum products, that brings the exchange value of your currency always into the equation. So, and insofar as your currency keeps losing value, subsidy will keep creeping back into your equation. So then the fundamental thing is to ensure that you produce enough in Nigeria, and therefore you can at least escape from the risk of exchange rate variation. That is where the issue lies. So domestic production on the one hand, and then you look now at what brings the pump head price to where it is. And that starts from the raw material, the crude oil itself, its pricing and the rest of it.
Okay, Doctor, let's quickly, I've taken note of it. We have to go back, look at our policy approach, regulation, but government must really sit down and engage labor. can afford another strike and unrest in this period. Recently, at the 13th Annual Banking and Finance Conference, powered by Federal Institute of Bankers in Nigeria, which we also involved, the Central Bank Governor, Mr. Biodun Adedipe, called on the financial services industry to position themselves and support the agro sector, information and communication technology, and even infrastructure finance. These are areas that can really drive growth against the contraction and challenges we are facing. Do you agree with this approach? Just your quick perspective on this.
Okay, now what I usually do when matters like this come up is ask myself, if I were the central bank governor today, what will I do? So now, if I look at the structure of the Nigerian economy as of now, I take agriculture, I take ICT, I'm getting close to 40% contribution to our GDP. So that tells me immediately that if I really want to create value and of course create traction in the economy, I should give good attention to those two sectors. Now, we know what agri represents in terms of contribution to GDP and in fact to daily livelihood. And then the ascendancy of ICT from about 10–11% contribution to GDP to 17.3%. That's GDP data. Clearly, those two sectors, they are the leading contributors to our GDP today. So if you want to be realistic, the way the world has changed in response to the COVID-19 pandemic shows clearly that ICT has become very, very important. So if we put all of those together, it makes sense for the CBN governor to say, look, let's look more critically at those two sectors. And of course, coming to infrastructure is an enabler anyway, and it has been so all along. So the issue will now be for us, which one do we want to prioritize? And I believe that is a major, major issue for us.
It's a very, very major issue. But of course, agro, finance, agro, and then ICT are very key for us because of the fact that over 40% of GDP. So definitely, it's something that everyone should now repackage their portfolio and their funding strategy to focus on MSMEs and all those key players in that sector to grow.
That's right.
Quickly, your view on the 15-page statement of the Nigeria Economic Summit Group, where it raises concerns over the clarity on foreign exchange management and made a clear need for steps to curb the incidence of what it termed chronic capitalism, which of course economists like you would understand better. Now, the CBN issued its own statement and disagreed on this, that's not what it is. But from your expert view, what is critical at this point for the country? When we look at monetary policy, we still come to the meeting that's beginning today.
All right, thank you so much. Now, my perspective on the issue of management of our foreign exchange, on this particular note, I will disagree with the NSG, okay? And it is very simple. Now, in response to the challenges of managing the exchange value of the Naira, when the economy went into recession in 2016, okay, we created a platform, all right? We called it the importer,
FX window.
FX window. All right, we created that. Now, that platform was created deliberately to bring more transparency to the process and also ensure that there's a window where we can actually have a semblance of the true, or what you might say, the real exchange value of the Naira. Okay? I'm not aware that that window has been closed. So, and that is why I don't so much agree with the perspective of energy in this particular regard. Now, so that window is open, it gives us a clear indication as to what the exchange value of the Naira is to the regular investor in this economy, on the one hand. The other side to it is that on that same platform, there is a forward portal there, okay, where you can also do forward transactions. And it also means that you can actually plan for 5 years, because the forward rates there will give you 60 months. So which means even if I want to plan forward for, as a business person in Nigeria, I can use the forward rate on that platform to form my expectation of where the exchange value of the naira will be in 5 years' time. So
we mean there's clarity in a way.
I mean, by all means, that gives some clarity. So now, if the reference of NSG then in terms of opacity in FX management is to the intervention, funds and programs of the central bank, again, we say I disagree with them in that area. And it is very simple. Every central bank around the world today, as we are, has gone pragmatic. So if you expect the central bank to play by what we knew as the textbook approach to central banking in the era where we are today, then you are mistaken. And that is what we see all around the world. Now, in the last 10 years, we've seen the discourse, for example, on negative interest rates, which we knew only in theory has become a reality. Okay? We also see what the Fed just put out last week as a statement. So when you look at all of this, they tell you that you cannot begin to evaluate a central bank the way it responds to a crisis as if that is what it should be doing when there's no crisis. What we are dealing with now is a response to crisis. And so it's a different thing when the economy stabilizes and begin to grow steadily in a sustainable manner, and they still continue that practice, then we can come out and say, look, central bank is not getting it right. So what we are seeing now, all around the world, in fact, it happened since 2009. Many central banks around the world have gone pragmatic, and that means they respond to as they find themselves.
Definitely, Doctor. That shows that, of course, based on your analysis, which is a healthy one, there's some clarity level we've seen in the FX, and of course, the interventions are much needed as we see across the world. Central banks are making efforts to stabilize their economies, supporting fiscal policy approach. But let's look at today. I mean, MPC meeting is beginning today, and of course, a lot to be expected. The central bank governor has a lot in his hand now, with all indicators, high inflation rates, high unemployment rate, and of course, the concerns around the economy. What would you be expecting to happen from the MPC? Do you think they will retain the interest rate or reduce it, or surprise us with an increase?
That's a fantastic question. I say fantastic because you've painted the picture. So, and the way I look at myself is, if I were a member of the Monetary Policy Committee, what would be the argument I would take to that platform as we meet today? Now, the first thing, as rightly said, is to look at those major macroeconomic indices and assure myself where we are, how should the central bank respond as a policy plan of government that looks at monetary policy. Now, where we are today, as you rightly remarked earlier on, unless we have a magic wand that will swing around, the likelihood is that the Nigerian economy will go into recession. Okay? Now, if that is what we expect to be more likely to happen, what then should be the response of the central bank to that expectation? It is like you are dealing with actual inflation as compared to expected inflation.
Yes,
right?
actual,
so what I will ask myself is, what should be most important to us in decision making? And that should be how to get the economy back on track. If we want to get the economy back on track, then that means if I look at interest rate policy, I should not in any way look at increasing the MPR, all right? Rather than increasing, I would say the worst I can do is to maintain it. Of course, they will also be wary about reducing it. I'm very sure of that. So for me, therefore, as a policy analyst, I will expect that the worst the MPC can do is to retain the MPR at the present moment, and most likely the other, reserve requirements that go along with that. So I expect the MPC to come out with maintaining the status quo as we are, and of course, recognize also that central bank had done some other things that seem to be yielding some positive results. For example, the GDR with respect to the banking sector. So addressing gaps there that will encourage banks to continue to lend more will be
to the real sector
that we want to go. And of course, to the real sector on the one hand, and also give more attention to the SMEs. So for me, I don't expect any change in the reserve requirements and the MPR.
So you expect a dovish approach.
That's right.
All right. Doctor, as we begin to wrap up, one of the challenges we've had, and you've been involved in this too, is synergizing our planning system, our economic planning, development planning, and making it real ability to achieve this, what we call inclusive growth, because you can't achieve inclusive growth if you don't have a coherent economic plan. You've been there for also prior to the ERGP that came on, it has elapsed now, and we have a 2050 plan looking at top priority, lifting millions of people from poverty, hundreds of millions of people from poverty. You already have the Economic Advisory Committee chaired by Dr. Doyin Salami. I'm looking at the need to synergize policy plans, committees, to have a single agenda and direction for the country. How can we really achieve this? What's your thought about this 2050 steering committee?
Yeah, I'm very excited about something you said now. You said, what will be the single agenda, all right? I will call it a one-point agenda. Yeah. Normally, you're supposed to have so many points in there. And this has been my argument. I mean, personally, I've been exposed to development planning in Nigeria for so long. As an undergraduate in the 70s, analysis then was the first and second development plans for Nigeria. Okay, in the 70s. And now, looking at several plans that have evolved and the ones I've been involved with, I've continually asked myself a question: what can we describe as the key anchor of our plan? We have never anchored our plan around any particular sector. And this is because I look around the world and ask myself, what is it you can identify with some economies around the world? So, and usually when it comes to this conversation, I use two countries to illustrate. I use United Arab Emirates in particular, I single out Dubai, and then I also use Indonesia, all right? And for good reasons. Now, the first thing, if I look at Dubai, you can see clearly the economy is centered around tourism. Yeah. It means every investment they make in infrastructure of any kind
is tied to tourism.
How will this boost tourism? Okay, so everything they do within that space is targeted at encouraging more tourists to come.
Yeah.
Like, you know, there was a time I was there, you know, vacation and of course a business meeting. And the cab driver that took me said that the way the economy is wired, and I found it interesting when the guy made reference to the economy, is for you to come as a tourist, you must spend every single dollar in your pocket. And when you are going back to your country, you are going back with an empty pocket.
Yes.
The driver described it. So
it's the way to go. Yeah.
Clear to me that the economy, even the least person in terms of hierarchy, we talk about social strata, understands that everything is about tourism. Then you now come to Indonesia, okay, and I pick oil palm there, okay, and Indonesia drove that to such an extent that about 2 years ago, the United Nations came to the point and said, listen, so that they will not continue to deforest the country, let's give them some money as an incentive for them not to convert natural forest into oil palm plantation. So they were given $1 billion US as an incentive. Yes. Hold back on the growth pattern they were following. Okay, that made it very clear. And of course, for 2018, Indonesia projected to generate $26 billion from the export of palm oil only. Okay, what has Malaysia done with that? Many derivatives from palm oil. So the question for me is, in our plan for 2050 that we are discussing now, what is the policy anchor such that every time we invest in infrastructure, we are developing it towards ensuring that sector drives inclusive growth that we want? Yeah. And we must also, within this space, also change the way we measure growth. In which case, the question will be, what are we measuring? Once we begin to measure what we are driving towards, it will just be an academic exercise, a document, beautiful one, but at the end of the day, you evaluate it, you find you haven't gotten anywhere. So we must have a policy anchor, and then ensure that we also measure the right things. If we do those two things, we'll be on the path to having plans successfully executed in Nigeria.
Thank you very much, Dr. Biodun Adedipe. I mean, you've closed it on a very good note that we need a policy anchor, and so much to learn from what you said from Dubai, Indonesia, and Malaysia. Very, very, very incisive. Hope to have you to discuss subsequently around Nigeria's economy, and hopefully we could have a policy anchor that will drive this much touted inclusive growth that we need in the country and the economy. Thank you once again, Dr. Biodun Adedipe, CEO
BAA Consult, a renowned economist in Nigeria, for this conversation on Nigeria and the pathway to achieving inclusive economic growth. It was nice having this conversation with you.
Thank you so very much for having me.
Thank you. Yeah.
I really enjoyed myself too.
Yeah, thank you. And that will be all for this edition of the Economy and Politics Show. You can send your comments and views to news@procng.com, and also join our website www.procng.com to watch our videos with our news reports and analysis. Join us by 10 a.m. for the market review, where we discuss developments in the market, and today looking at the equities market, what's really happening there. Till we come your way again, thank you for watching. Have a nice day and stay safe.